Safaricom seems to be making quite some interesting moves between 7 shillings and 40 cents, even touched a high of 8 shillings and 10 cents. That's the highest level we have seen post-IPO. What's happening around that counter, and is this gain sustainable?
Well, we have to look at Safaricom with a bigger approach, because with competition surrounding it in terms of the voice market, it has actually ventured. It had set plans in place to focus more on its data, and you can see they're gaining awards in terms of when you notice M-Pesa, and also the recent signing with KPLC to use some of the power lines in terms of running the fiber optic. So what is happening is that Safaricom has become a share that is interesting not just the local investor but also foreign investors in terms of long term. This is a stock that people are realizing that you can make your money's worth, and by going by what we saw in the course of this week, it was actually one of the highest traded, 34 million shares between 7 shillings and 40 cents, 8.10. That is something positive on its end.
British BOC today announced lower profits. That's by about 22%. They attributed this to operating costs. How's this particular stock currently performing, and what's your outlook for it?
Well, we need to understand BOC first and foremost had gone into a long, protracted trying to buy over capacity. When that fell through, they had to refocus on their core business. And you notice that they spend, in terms of, there's about an 80 million shilling, and they had spoken about it, which would be spent in terms of renovating and actually dealing with a new air separator unit. That will go a long way in terms of affecting the bottom line. And then going forward, you look at the nature of business that BOC is in. It's actually a niche market, whereby there are actually not that many competitors in the market other than Cabacid, which BOC had tried to take over and have, let's say, what we talk about 100% of the market share. But going forward, there's been a very big rally in terms of cost of inputs have been expensive for them, and hence that has affected them. But in the long run, it still is. But if you look at the share price, it still hovers between 160 and 155. There's not that much activity in terms of even the shares traded, because owing to the whole issue of Cabacid and BOC. So
let's briefly touch on the bond market. Is it beginning to lose its flavor? Reports today indicate that the 7.5 billion shilling treasury bill sale was actually undersubscribed, with bids totaling 4.9 billion shillings. This is something we didn't see in the market last year, and everybody was moving towards a fixed income market. What is happening, with that on that side? I'd
call it the seesaw effect. Last year, equities or stocks were performing poorly, hence there was a rally towards the fixed income securities. This year, you've noticed the beginning of the year, the equities side of the market has had a very good rally, and then you look at the T-bills or the bonds for that matter in terms of returns, they're slightly lower in terms of returns. So most astute investors would actually switch towards the equities, which have a higher return, yet having in mind there's also the high risk element. So it's more or less like that, the seesaw effect. When one side of the equation is actually performing better, there'll always be a rally towards that end. So that would more or less explain the situation we are in right now.